Julia, your thoughts on the session in the end?
Nothing seems to be able to stop this market. I mean, we saw a new high for 2013 as well as a new closing high. So all up, great for the Australian share market. And I guess over the last week, what we have seen is a couple of impacts on the market. First of all, from a global standpoint, we've seen some better growth prospects coming through, especially the numbers out of China supporting stronger than expected growth expected to come out of China. And then secondly, on the domestic front, we are seeing a few cycles coming to their inflection points. First of all, the earnings cycle for the Aussie market. We've seen flat or negative earnings over the last 3 years, and now it looks like it's going to turn positive. And also the interest rate cycle. We might have one more interest rate cut left, but it does look like that easing cycle also coming near to the end as well. So altogether helping the Australian share market, we have seen a bit of a tilt into the cyclicals rather than the defensives, and we really saw that come through today as well. We saw the best performing areas being the telecom and the industrials, but the worst were things like utilities, property and the financials. So it does look like a little bit more risk being added to portfolios, and that shows through in the size of companies which are doing well as well. We have a look at the mid-cap index today, beating the ASX 200 benchmark index. And also some stocks reaching new highs today. I guess the big ones today were Warrnambool Cheese as well as Bega Cheese, both of these stocks reaching new highs. And it does look like Bega making a tilt for Warrnambool, so helping both those stocks today. But altogether, a great day for the market, another 2013 high. So looking good.
Indeed, focus today, unsurprisingly, with their results. In the end, though, shares closing down 3.8%. It has to be said they've run pretty hard up until today.
The shares are up 56% over the last 12 months, and if we have a look at Myer shares, the cyclicals have run ahead of the actual cycle turning, and unfortunately the commentary coming through does show that still the consumer remains quite subdued. Myer in the past has said that momentum had slowed in May and June, and really there wasn't anything in today's update to say that things had really turned. If anything, they were extremely cautious. So we saw net profit down by 9%. We saw its dividend payment coming in at 8 cents, so that was below expectations, and total sales just increasing by 0.8%, so less than 1% there. On a like-for-like basis, that turned out to be just 0.4%, and with operating costs rising by 3%, it doesn't paint a very good picture. Not only that, in the current financial year, the cost of doing business is expected to once again grow by 4 to 5%, so it does look like the apparel retail is doing it quite tough. And I guess if you have a look at cyclical areas on the market, one of the things that is helping the cyclical sector is the fact that we are seeing the housing market now running up and house prices are increasing. So that's probably going to help the household retailers as well as the white good retailers. So stocks like Harvey Norman, JB Hi-Fi, rather than the apparel and the department stores like mine.
Forward, we're going to be hearing from David Jones in not all that too distant future. We saw it drag down, but it's probably going to be suffering the same ills that Myer is.
I guess if we have a look at David Jones, one of the things that is different, in one of the ways it's different from Myer is the property portfolio, which helps to underpin the valuation in David Jones as well. And just recently in the US, we saw the Neiman Marcus sale, and that was done, I think, at about 11 times EBITDA. And a few months ago, we also saw Saks being sold off in the US. That was done by around about 10 times EBITDA. And I guess with Saks, they had quite a substantial property portfolio, which was valued obviously more than the book value at the time, so that made it an attractive takeover target. Having said that, the retailers here in Australia and the department stores here in Australia are probably a little bit different in that they have run up very hard. You know, Myer's up by 56%, David Jones is up by around about 22% over the last 12 months. So valuations on these department stores, if we don't see a pickup in sales, they are looking overvalued. So really we want to see the sales coming through before jumping in on these businesses, because investors have waited so long for a turn in the cycle and for consumers to start spending it again, and every time it seems to be just around the corner, it seems to be dragged out even further.
And look, Sigma as well, we got the results from them. Julia, what did you make of those numbers?
Well, I think Sigma often trades like a retailer as well, because it faces some of the same structural challenges that the retailers do, in that a lot of people are trading on the internet. So what Sigma's trying to do is build up its internet presence as well, so people can buy things on the internet through its brands like Guardian as well as Amcal. And the problem is it's doing this at a time when the industry is obviously struggling quite a lot. There's a lot of bankruptcies in the pharmaceutical area, and that has implications for bad debt in terms of Sigma as well. And we saw that coming through in today's first half numbers, where we saw profit down by 38%, and part of that was the impairment to Harrison's, which worked out to be, I think, about $4.1 million. There was also another cost of about $3.7 million. So just really watching the pharmaceutical space first of all to see whether there is an easing in conditions, because the bankruptcy is a key thing for Sigma Pharmaceuticals and bad debts, and then watching that internet presence as well to see whether that helps the sales process. But Sigma, a little bit brighter in terms of the outlook. They do expect full year profit to be better, and I think that really helped the shares today. So despite profit falling 38%, I think the shares were higher today.